Hello, everyone. Thanks for joining and welcome back to Wall Street Bullion. Our guest today is the one and only my good friend Andy Schectman, CEO of Miles Franklin. Andy, welcome back.
Good to be here with you, Ivan. Thanks for having me, brother.
Yeah, thank you for coming down and speaking to the precious metals community. There's been so much movement in the past 3, 4, 5 months in silver and gold. First, we had that crazy, tremendous jump in silver and gold prices. It just went straight upwards like a rocket ship. Now we had
Yep.
like a little bit of a correction. What are your feelings right now, Andy? Is it going to continue to correct, or have we found that base level? What's happening right now?
Well, I think it's when you look at it from the mainstream perspective, yes, much of what they said was valid. It had gone up, really unencumbered for 9 straight weeks. It was overbought. All of that's valid. All of that's true. It had busted through well in excess of moving averages, the 50, the 200. All that's true. It was ripe for a correction and a flush and a pullback, and all of that is true. And if it had been said that way, of course, they always throw in, is this the top, the 2011, 1980 top, where it starts to head down and maybe, this is it, maybe look for other assets, Bitcoin or whatever the hell you want to talk about it. Look, if they would have just told the other half of the story, I would have been more inclined to acquiesce to some of their validation or to some of the things that are valid. I think by not telling the whole story, it invalidates much of what they say. The initial snowball that was pushed down the hill was in the middle of the evening after all of the markets had closed and the New York traders were in bed, and it was sold in the access market, it being gold and silver, billions of dollars worth, in the middle of the evening when there's no liquidity, when the markets aren't there to catch the bids, and instead the driving down of the price, dumping it onto the market at strange hours. When it started, it was in the middle of the night. I don't remember exactly what time. And then the next day they did it at like 8 or 9 o'clock at night, when in between New York and Asia. Again, New York's closed, Asia hadn't opened yet. And you see a price that's getting clobbered because all that does is hit the sell stops that are embedded in algorithmic programs along the way, and they drive the price down. In other words, this was done as a drive-by shooting for an effect. There would not be a trader on the planet with a third of a brain cell that would dump all of this in at a time outside of New York trading, where that's where the price is set, that's where the bids would be. They would do it slowly and judiciously over time, even a matter of days, that amount, slowly, without alerting or waking everyone up to a dumping of metal, and they would catch all of the demand for 9 straight weeks that have been growing up. They would have got a much better settlement. In fact, they guaranteed themselves the absolute worst settlement. And so the selling triggering stops made the market collapse. Now, what they also didn't talk about, and let's just stop right there for a moment. If they would have said all of those things, market's overbought, gone up for 9 straight weeks, the technicals said this is ripe for a correction, for a flush, for a pullback, whatever validation they want to attach to it, it's
Hmm.
invalidated by not saying, by the way, some idiot dumped it in the middle of the night when there was no liquidity in the market and there were no traders, and this is done in the access market. Nobody would do that. They conveniently leave that part out. The other part that they left out was the second day, when it was done in between New York and Asia. Again, equally a stupid time to do it. Within just a few minutes, the silver price shot right back up. Well, how the hell did that happen?
Hmm.
Well, if you look at Michael Lynch, and he does an amazing job at analyzing the COMEX movements, he says that it was Bank of America and Morgan Stanley that came in and did the purchasing. It was European banks that did the selling, and it's commercial banks, and it was Morgan Stanley that came in and did the buying. Well, why is that valid? Well, the chief investment officer of Morgan Stanley recently came out and said the 60-40 rule of investing that Wall Street's used for, I don't know, 50 plus years was invalidated now by, um, uh,
60, 20, 20.
yes, in other words, sell half your bonds and put 20% into into gold. And then that's Morgan Stanley. And then Michael Hartnett, the chief analyst, head analyst for Bank of America, says no, 25, 25, 25, 25. 25 stock, 25 bond, 25 short-term treasuries, 25 gold. And I mean, in my whole career, I've been 35 years, they've never said that at all, ever.
Yeah.
Maybe 5% they would say. So the two American banks that are saying 20 to 25% allocation come in and do the buying, according to Michael Lynch. And he's got a great Substack. People should check it out. So when we talk about this, the fundamentals are fugazi. The fundamentals are strong as hell. The LBMA is being bled down. I did an interview with Alistair McLeod this morning, and Alistair's like, "Yeah, I see this morning that the slight backwardation is reappearing between London and the U.S. again. So all the metal that got shipped from Shanghai at exorbitant lease rates and whatever 20 or 30 million ounces that got shipped from COMEX over there to quell the problem." Well, what good did that do? There's still deliveries next month and the month after and the month after. Mm-hmm. And so the physical demand is overwhelming the paper price. And it's desperation when you come in the middle of the night and dump at a time that no one would do it. It was specifically done to cover shorts and for effect, and for the media to jump on and tell half the story without saying, by the way, some idiot dumped it when no one else ever would, to maximize the worst possible settlement they could ever get. And so that to me invalidates so much of what would otherwise be valid statements. And I think it goes to show where silver is ultimately going when the U.S. government has proposed and written into draft, and it will be accepted, that silver will become a critical mineral in this country. Things are changing. And I think what we saw was a desperate attempt by some really caught commercial banks that are massively short, and the rising price, coupled with a government shutdown and trade meetings with Xi and all sorts of stuff going on. Mm-hmm. The last thing, and interest rates going to be lowered again. The last thing they wanted is for metal to get way out of control, and this is their way to stop it. But I would argue only temporarily.
Hello, my fellow silver and gold stackers. Please hit the like and subscribe button. It will really help the silver and gold community grow. It'll help this channel grow, and I'd really appreciate it. Back to the video. Yeah, and you know, we for years and years we've known, Andy, that there's been market manipulation and spoofing going on in the precious metals market. JP Morgan traders got caught by spoofing the market and manipulating the precious metals market. They got fined. Do you think it's harder and harder for them to spoof this precious metals market now? Like you said, they're just kicking this can down the road because eventually next month there's going to have to be deliveries. So my question, is it harder and harder for them to manipulate or spoof this precious metals market?
You know, when I started coming on your show way back when at the beginning, I was talking about all the deliveries that were coming off of COMEX. It was very unusual starting in 2020 because no one ever stood for delivery. The exploitation of the delivery option in London and the US is something that was rarely exploited. And now it's being exploited not only by all of the BRICS nations and Russia and China and India and Saudi Arabia and all of the countries that are standing for delivery on all of the world's commodities, but there's someone got to President Trump, in my opinion, and said, if we don't do this, we're dead. We're dead, because they're draining the shelves across the globe. And so they phrase it as tariffs, and they start bringing it back. It's not tariffs, it's reshoring. All the gold and silver, billions and billions and billions and billions and billions of dollars worth of metal. So far this month, which is a non-delivery month in silver, just shy of 8,000 contracts have stood for delivery already. At 5,000 ounces a piece. So do the math. I mean, it's not a delivery month, but it's still an awful lot of silver.
Yeah, it's a lot.
And you know, yes, it is harder, because if in a game that is just cash settled amongst coordinated players across the globe, it's easy to suppress the price. But when all of a sudden you are being challenged not only by central banks and sovereign wealth funds across the globe, but now a large, what appears to be entity here in the United States who are literally bringing in billions of dollars a month in silver onto COMEX, something's different. And you can only manipulate a market over time by pushing the direction it's going. And it was easy to do that for a long time. The fact that they are standing for delivery slowly, not so fast to break the system like we're close to seeing in London, but slow enough to bleed it all dry. And that's why I would argue that some of the metal flowed back there reluctantly, because this is how they have been bleeding down the system for the last 5 years by slowly off taking as much as they could out of London. And that's why London has the lowest float that they've had basically ever since they started keeping records, about 140 or 50 million ounces against 600 million ounces a day in trading. So what could possibly go wrong? And so they are standing for delivery. This is showing the cracks, and that's why we had $3 an ounce backwardation for a while, where the physical metal right now today is worth more than the futures price, and that's very rare in the commodity complex.
What's your biggest concern, Andy, whether it's in the precious metal sector or just the financial space right now in the state of America right now with, $38 trillion debt, $1 trillion a year in interest payments on that debt. What's your biggest concern right now that you have your eye on?
Well, I mean, we need to do something quickly. You mentioned 38 trillion in debt and a trillion in interest payments, which is the number one line item. We added a trillion to the debt in 71 days recently. It's
Yeah, it's
accelerating.
crazy.
Our fiscal irresponsibility is ridiculous. 60% of America can't read past the sixth grade. 60% of America has no college education. Most people in the country can't write out a check for 5 grand for an emergency. We're
Wow.
broke, we're insolvent, and the 38 trillion doesn't take into account the over 100 trillion in unfunded, 150 trillion in unfunded liabilities, Medicare and Medicaid, and Social Security and government military pensions. And I don't know, there's divisiveness in politics. There's, after the last 4 years of policy that was too stupid to be stupid, we've now entered a period of time where I think it's all about an acceleration in a new system that's coming. So I'm concerned that we have hard times ahead of us. And I think what President Trump is trying to do, if there's any nobility in it, is to massively debase the dollar, to devalue it, to ultimately bring back manufacturing and to relinquish, according to Triffin's dilemma, relinquish the reserve standard. If we are the reserve currency, we will never have a manufacturing base. We will always run trade imbalances. I believe they want to get rid of the world reserve currency. They want to bring back manufacturing. And if Judy Shelton is right, and they peg gold to the back end of the treasury market next July, you can bring back with a 20, 30, and 50-year treasury redeemable in gold with zero coupon, no interest in 20 or 30 and 50 years. You can bring back manufacturing immediately with no upfront borrowing costs. And with the passage of the Stablecoin Act, the Genius Act, you look into it and you see that every time money moves, stablecoins will be created. And the interest, because they're backed by US Treasuries, the interest that is generated is not transferable. Tether, as an example, USA Tether, by the way, their CEO is Bo Hines, the guy that was Trump's crypto advisor until August. He's now backing US, or the CEO of USA Tether, which is already stablecoin, or excuse me, Genius Act compliant. They will back everything with treasuries, which creates synthetic demand for the treasury, pushes rates down, but they will take the excess, the interest between the stablecoin and the treasury, and they'll buy gold. And I think they'll buy Bitcoin, and they'll buy gold to make it go much higher. They already have over 8 billion worth. They were just at the Beaver Creek Mining Summit. They're going to continue to buy gold to devalue the dollar and to ultimately peg the back end of the treasury market to bring back manufacturing, because we need to. Our children and our grandchildren are dead otherwise
Yeah.
with illiteracy and uneducated masses and a massive spread between the haves and the have-nots and no manufacturing base and massively indebted. We need to do this no matter what. And I think they will do that through devaluing the dollar massively by letting gold go higher. I think they'll let Bitcoin go higher and use it to pay off the debt. This isn't conspiracy. Read the executive order that next year they're talking about revaluing gold as part of the Bitcoin fund that Senator Lummis from Wyoming has been advocating for. And if they do revalue it, it devalues the dollar. It's not about revaluing gold. It's about devaluing the dollar to a much lower level so we can sell our products to the world. You have to bring back manufacturing. How do you do that? You peg gold to the back end of the bond market and you end up having zero upfront borrowing costs. Like in the Shawshank Redemption, there's 2 miles of shit that we have to crawl through to get to the other side, like Andy Dufresne did. And that's what happens with the irresponsible fiscal policy that we've had and the brain dead monetary policy we've had for all these years. To get to the other side, we need to produce things again. We can't be reliant on pharmaceuticals from aspirin to penicillin and everything in between from the Chinese, or aircraft components or military components. We need to be the engine of growth and manufacturing again for a population that, with this limited advanced education, 60% with no college degree, and AI will take 50% of entry level jobs in the next 3 to 5 years. They say, well, we have to do this. So what am I concerned about? I'm concerned about tough times. I'm concerned about inflation and half empty shelves that until we are able to get our fiscal house in order and start manufacturing again. I think that unfortunately that there will be a couple of years of difficult times, but I think there is reason for optimism if we are able to pull this off. Um, at this point, what choice do we have? We can inflate, we can default, or we can try and grow our way out of the problem. And the only way you grow your way out ever is to bring back manufacturing and to give up on being the reserve currency. You look at all the BRICS nations, they're all talking about trading their local currencies and settling imbalances in gold. You don't see a common currency. You don't see a replacement for the dollar. Everyone used their currency, and gold is finding a common denominator that is trust within the system, whether it be in the Southern Hemisphere or up here in the United States. But something needs to change. And I'm concerned that if it doesn't, things are only going to accelerate in terms of our indebtedness and the effects that ultimately that will have on the reserve currency. Because at some point, a currency that's based on trust that has lost a good deal of trust in weaponizing the treasury market, in sanctions, in tariffs that are actually sanctions that are masquerading as tariffs, and fiscal and monetary irresponsibility. The rubber meets the road at some point. So
Hmm.
concerned that tough times ahead, and the only way that you get out of this alive is to have assets. That is how you win. And the biggest, most well-informed money in the world know this, and that's why we're seeing billions and billions and billions and billions of dollars every month come into COMEX. So you know what? Get your own financial house in order and start accumulating assets. You save in dollars, you're going to go broke. One last point to that. You see the dollar index down. The dollar's down 7 or 8% this year against the dollar index. It was down 11. It's rallied a little bit, but it's down almost 70% in silver, even with this pullback, 65.
Hmm.
So 60. So the point is, it's masked. The devaluation of the dollar is masked at looking at a basket of all the other brain dead crap currencies measured against something like gold or silver, and you see the real devaluation of the dollar. Um, and this is a trend that will only accelerate.
Most people think the only way you can profit from gold is when the price goes up. But what if you can earn a yield on gold, paid in gold, without ever even selling an ounce of gold? Instead of you paying to store your gold, you can now get paid to own it. Monetary Metals offers gold owners a chance to earn a yield on gold, paid in gold up to 4% in physical ounces. That means you can accumulate more gold ounces in your account, not paper promises. Unlike dollar yields that can be slashed or go negative, a gold yield is completely different. It's a real return that has been measured and trusted for the past 5,000 years. Thousands of clients have trusted Monetary Metals to help their portfolio and help their wealth grow in gold. Join the community of investors earning a yield in physical gold annually with Monetary Metals. Click the link in the description below for Monetary Metals to find out more.
Right.
Yeah, absolutely. And I want you to share, Andy. I've had you on this channel for years now, but one piece of advice that I think really struck out to me that you've been teaching me and others, which I'd like you to share with the new people of the channel. There's so many new people who are joining the community in the silver and gold, precious metals market, especially on this channel. What would you say to them as guidance? I know your dad told you buy a piece of something every two
Yeah.
weeks, buy silver or gold. Explain that to the audience, to the new members, what your
It's
father's
like,
wisdom.
yeah, he told me the only rule. I was 19 when I almost just barely 20. And that was 30, almost, that was 35 years ago. And he said, pay yourself first. You'll need to buy something. I don't care if it's, silver coin every 2 weeks. I don't care what it is. You'll buy something every 2 weeks when you get paid, or I'll fire you. That's the only rule. Now, I've owned the company for 2 decades outright, but I have honored my promise to him, and I've purchased something every 2 weeks. Not to get wealthy, but because it is wealth. It's my savings, and um, you know, letting the laws of compounding work for you instead of against you, Ivan, and understanding that whether you're working out in a gym or strengthening a relationship or investing, it takes time and effort and paying yourself first because 5, 6 years that I've known you has gone by like that. And,
Yeah.
that's just the way life goes. And it's like a roll of toilet paper. You don't notice it spinning when you're young. As you get older, you start to see it moving faster. And you actually see the cardboard at some point, and you realize time is getting away. And I wake up and I say, how the hell did I turn 55? I started this company 35 years ago. And it was the
Wow.
best gift I've ever been given to learn the laws of compounding, to have them be your friend instead of enemy, to pay yourself first, your future self. And if you could sit down and have a drink with yourself when you're 20 years old, with your 55-year-old self, and they'd say, hey man, thank you so much. You took care of us and your children that you'll meet someday, and your future will be much better because you prioritize yourself first. And that's a lesson that has stuck with me, and I've mandated it everyone who works with me. And I think they all think it's kind of nuts at first, and every one of them has said thank you so much for telling me that. It's changed my life, and it will. And you got to start somewhere. And the people who are in the best shape, they didn't get there from working out for 2 weeks hard. They do it religiously and methodically and habitually. That's how you should save, because one day too, you will be 55 and say, where the hell did all the time go? And so putting some money aside every time you get paid, I don't care if it's 1 ounce of silver or as much as you can put into a asset, right? Saving in currency is bad, saving assets good. Whatever assets you can buy every time you get paid will only help you in the future and allow you to get ahead.
Yeah, it's the best advice, and I've taken it to heart for the past 4 or 5 years. So I really want to thank you, Andy, for
Yeah,
for
man.
giving me and everyone on this channel that advice. Well, before you go, though, I really want people to follow Miles Franklin. How can they connect with you? Can they, is there an email they can contact you with so they can get some type of, where can they find you guys?
So we have our own YouTube channel, Miles Franklin Media. Michelle McCory's with me now too, and we're excited about that.
Nice.
We do things differently. We have 14 brokers that I go back to childhood with, and every one of them was successful in their own right. Private equity, Wharton School of Business, Wall Street, you know, owned and sold businesses, you name it. And friends since Little League, just about every one of them. And we have a lot of relationships. We help Sprott USA and their brokers clear orders. We have a lot of relationships. So I keep my prices close to the vest. If people want find out our prices, send us an email at info at milesfranklin.com. We don't update it every day. If you find better prices, tell us. More than likely, we can match and in most cases beat it. We've never had a customer complaint ever in going on 36 years. And that's something I'm very proud of
Yeah.
more than anything. So info of Miles Franklin Media on YouTube, and any questions on the info at Miles Franklin account that you want, info at milesfranklin.com that you want to ask that you heard here, or any questions, precious metals IRAs, or economic, geopolitical, whatever. We'll answer them for you. And if they're directed to me, put my name on there. But all of the people at Miles Franklin who you will talk to are qualified to the nth degree to be able to answer those kind of questions. And we will make sure that your listeners are not the first customer complaint we've ever had. Doesn't mean we haven't screwed up, but we make it right when we do. And it's good to be here with you, Ivan. I appreciate you having me on as often as you do. And I always look forward to our short chats together, and look forward to doing it with you again soon.
Yeah, thank you so much, brother Andy. It's a huge pleasure having you on. Everyone who's watching this, highly recommend you go check out Miles Franklin. Send them an email, see what they can do. And everyone watching, please hit the like and subscribe button. But Andy, thank you so much, brother.
You got it, my man.
As the market develops, love to have you back on in the future.
Look forward to it. Stay well, and maybe I'll see you up at the Vancouver Resource Investment Conference this year. If you're up that way, I know you're in Canada, and that's one of the two shows I never miss. So if so, first beer's on me.
Okay, nice. I'll see you there.
All
Take
right,
care,
brother.
Andy.
Take it. Yep. Bye bye.